Now, it is very important that you actually understand order flow, because this is essentially how and why price move, right, between buy orders and sell orders. So this is how the market move in general. It will start off with some sort of ranging phase, right, where price has already lose steam after a downtrend or a uptrend, and right now it's just going sideways, right? A lot of uncertainty, and the smart money is also accumulating their positions within this range right here. And then price will break out of this range, causing the initiation phase, right? The initiation phase is basically the breakout phase, right, where the smart money has already decided to push the price up. Now, once they have pushed the price up, they tend to push the price back down to mitigate the range earlier, right? To do some sort of retest, to fill up other buy orders that they might have left out, right? So it goes by range, initiation, and then mitigation. Now, after price has come back down here to retest this order flow right here, this demand zone right here, and it's gonna be continue pushing up, right? Continuing with the overall trend. So you will notice this is essentially how the market will move. That is why I say that when price is in the initiation phase, right, you need to relax, all right? You cannot be getting FOMO and entering for buy position right here during the initiation phase. You need to wait for price to actually come back down to retest it again during the mitigation phase, and then that is when you can potentially enter for the trade. And in this way, you will be having like a higher risk to reward ratio. So range, initiation, mitigation, and continuation, these are essentially the 4 stages of the demand range, right? So this is a very strong demand zone that we have right here. That is why price has managed to come down here, retest this demand, grab more demand, grab more liquidity before pushing the price up, right? As simple as that. You will see this happen over and over again on the charts. Same thing over here, right? For the supply range is basically the opposite of demand range. Now, supply range is basically where price has been consolidating, going sideways, and right now it has broke out through the initiation phase. Once again, you can see range, initiation, and then it come back up here to retest the supply range. Maybe they want to enter for more sell orders, they will scale in for their position, right? And then that is when they will enter for another sell position right here and continue with the overall downtrend, right? So this is an opportunity that you could potentially catch. So if you miss the opportunity to sell when price break out of the range, you can wait for price to come back up, actually retest it again, the supply range, before entering for another sell, right? So essentially, this is how order flow works, right? There will always be somewhat like amount of buyers and sellers inside the market. There will always be an imbalance between these two groups, right? Buyers might be more than sellers, sellers might be more than buyers. In that case, we always fall back to order flow, right? In this demand zone, this has tell us that, okay, at this zone right here, this particular zone, there's more buyers than sellers. And then at this supply zone, there is more sellers than buyers. Now, once again, let's look at order flow, but this time let's look at how order flow works in terms of bullish and bearish. And you will notice this is extremely similar to market structure. We have learned that in an uptrend, price will be creating higher highs, higher lows, higher highs and higher lows, higher highs and higher lows, and then creating another higher high. Now, what you don't know is that within this range right here, where price is creating its higher low, right? This is some sort of demand order flow, right? There is bullish order flow that is giving price the steam it needs to push the price up even further. Same thing right here. Come back down here, retrace, grab more demand before pushing price higher, and then come back down here, grab more demand before pushing price higher, breaking structure, creating the new higher high, right? This is essentially how price works, because you must understand, right? We want to always buy at a discount. We want to buy when price is cheap. Same thing, smart money, they want the exact same thing. They don't want to buy at the top here. They want to buy when price is cheap, which is right here. That is why that they'll wait for price to actually come down to this area right here before entering for more positions. And within this like little retracement right here, right, you probably see something like this, right? You probably see something like this where price is consolidating, and then when price starts making its up move, right, breaking structure here, you'll probably create something like this on a smaller time frames, right? It all adds up together. you will notice that in terms of bullish order flow, there is an overwhelming amount of buyers inside this whole uptrend, right? This is purely a place where the buyers are dominating, right? They are extremely dominating and they are winning the game, and that is why this uptrend is managing to maintain, right? That is why we need to wait to buy at all these higher lows right here, right? So on the other hand, you got your bearish order flow. Bearish order flow is basically the opposite of bullish order flow. There is a lot of sell orders inside the market right now, right? The overall trend is down, creating lower highs, lower lows, breaking structure, creating another low highs, lower lows, lower highs, and lower lows, right? Bearish order flow. Like I said, price will never go down forever, it will never go up forever, right? At some point of time, it needs to retrace so that it can grab more liquidity, grab more supply, right? And then you potentially retrace to some sort of supply zone that we have earlier right here, mitigate that supply zone and hit back down, right? Creating another lower low. Same thing right here, it will come back up to maybe the supply zone that caused this huge down move. Mitigate it before going back down. And you will notice all these retracements within them consist of bearish order flow. Now let me just take out the marker and just explain to you guys how all this like truly work on the charts, right? So right here, what I am showing you is a fractal perspective of an uptrend market structure. So this is the last higher high, okay? This is the last higher high, and then this is the last higher low before price goes up here, creating another higher high and potentially another higher low, right? If you look at this, right, this is, like I said, very, very similar to market structure. Very, very similar. Firstly, let's go step by step. You can see I noticed that like I literally put the steps in a particular sequence. Firstly, let's go through bullish break of structure. So a bullish break of structure is basically where we are expecting price to pull back to the demand range, right? So you can see right here, price has just created its higher high after it has come back down here to create a higher low. And right now it just break the last higher high again, leaving behind your break of structure right here. Now it's gonna go up, and at some point of time, it's gonna lose steam, right? It's gonna lose momentum, and then they will need more buyers to come inside the market to fill the orders to continue and sustain this uptrend. So price will start retracing, and when price starts retracing, guess what? It will translate to bearish internal order flow, right? These are the external order flow where it's bullish, right? Like clear as day uptrend, bullish order flow. But then during the internal order flow, this mini little retracement, that is bearish order flow, right? Basically, it's basically saying that price will retrace, and when it's retraced, it's not gonna retrace straight line like this, all right? It's gonna retrace and just create a lower high, lower high, low low, lower high, low low. Basically your bearish order flow like this, right? In this case, price is retracing so more buyers can enter at a discount pricing, right? Remember just now we talked about how we all want to buy at a discount. We want to sell at a premium and we want to buy at discount. So if you split this range right here, right, swing high to swing low, you split into 50%. Oh wait, no, this is the swing high and then this is the swing low, right? The last swing low, and you split into 50%. So the equilibrium will be somewhere right around here, where we could be expecting an inflow amount of buyers entering inside the market. So you can see price is creating bearish internal order flow right here, creating basically your retracement and stuff. And at the same time, it's also leaving behind minor break of structure, right? You can see these are all very minor break of structure right here. Minor break of structure, minor break of structure, minor break of structure. Because on the outside, on the external structure, on the external order flow, is creating your normal break of structure. So this is internal order flow, and this is basically price creating your minor break of structure, right? And then you can see it starts creating low highs, low lows, low highs, low highs, low lows, low highs, and then this retracement is going to be done, right? At some point of time, it's going to be done, right? And you will notice that price tends to retrace to the demand range for the last higher low. In case I forgot to mention, but when you see this, you will notice that when price retrace, right, after a huge up move, it tends to retrace back to the demand range, the previous demand range. So this is the previous demand range, and look at what price retraced to, right? Price managed to retrace all the way down here to the previous demand range. Same thing right here. After price breakout, it's going to retrace back to the previous demand range right here, right? Which it did exactly just that. Same thing with the supply right here. You can see it will retrace to the supply demand, supply order flow and supply order flow. Now, once again, what we want to do as buyers, or rather people who trade with the trend, is to wait for this retracement to be over, right? And how you know that is when price has translated to bullish order flow, okay? Because right now here, this is all still bearish internal order flow. So you have to wait for price to shift to bullish internal order flow. Right, and look at the third step. This is where price has managed to mitigate the demand range from previous higher low. So this is the previous higher low, and this is the demand range that was within that previous higher low. And look at what price did. Price has managed to come back down here and touch into this demand range, right, from the last higher low, right, grabbing demand. At this point of time, notice what price does. Price is no longer creating a lower low and lower high. You can see this is the last lower low, and then there is no more lower low after that. And then this is the last lower high, and price has actually managed to win back up here and break through the last lower high. What does this tell us? This tells us there is a market shift, right? There is basically a fundamental shift from the boost to, the best to the boost. There's an error right here. From the best to the boost. So all these are bearish minor break of structural, and right now it has shifted from minor break of structural for the bears to bullish break of structural for the boost. And right now, you will notice that the internal order flow is bullish. And that's good for us because our internal order flow is aligned with our external order flow. So this is the internal order flow and it's bullish. And if you look at the external order flow, like the macro bird eye view of price, you will see that price in the uptrend is also in a bullish order flow. So at this point of time, everything seems to line up. Internal order flow is bullish, external order flow is bullish as well. That is when we can potentially look for buying opportunities, right? We can look for our entry points to enter for buy positions. Now, all supply ranges become liquidity targets. You can see what I mean by here, this step is that where price tends to go is that it tends to go to all these highs right here that was formed from all these like supply order flow, right? This one right here, this one right here, this one right here. So all this supply order flow, right, they tend to be filled up by all these buyers right here. So price is going to go and tap point A first, and then followed by going to point B and then point C, right? It's going to crush all this supply order flow that we have right here, right? And that is essentially how price works. You can see after price created the market shift, and the order flow has shifted from bearish to bullish. It's continued to create your higher highs, higher lows, higher highs, and higher lows. Once again, minor break of structural, breaking through the last higher high. And then another one right here. And then eventually, the bullish order flow will hold until price breaks the last major swing high, creating an external break of structure. What I mean by that is that in order for price to create another higher high in an uptrend, right, price has to break through the last high, and this is the last higher high, right? This is the last high right here. And when price has already shifted from bearish order flow to bullish order flow, price tends to be pushed all the way up, breaking through the last high right here. And that is exactly what I mean when I tell you guys that you guys must ensure that the internal order flow match with the external order flow. Because if the internal order flow is bearish like this, right, and let's say you enter for a buy immediately right here, because you assume that price is going to continue going up now that price has already created a new higher low. You can see this low is higher than the last low, so maybe price is just going to go up straight. But what you don't see is that there is still bearish order flow that is present inside the market. Price has not turned bullish yet. There is still bearish order flow, right? And you can start seeing that is very obvious once price starts going down, creating more lower lows and lower highs, right? You can see bearish internal order flow. So that is why, like I said, we want to wait for the bearish order flow to end, right? Once it ends and bullish order flow takes in and enter the market, that is when we can potentially enter for a buy, right? As simple as that, guys. This is basically the gist of order flow. You can see that, right, all these supply ranges become liquidity targets for the buyers to aim for, smash this one, and smash this one, and so on and so forth, right? So I would say that this is a very fundamental concept that you guys must understand when it comes to trading, understanding and finding order flow so that you can trade on the right side of the market. And always make sure that before you enter for the trade, think about whether the internal order flow align with the external order flow. If it does, then it will be 10 times better compared if you are trading against the trend, where you are entering for a sell position right here, where it's clear as day that the overall trend is an uptrend and is a bullish order flow, and you're entering for sells here. It doesn't make no sense, right? We want to trade the trend. Now this is what it looks like on the charts, right? We have mentioned about bearish order flow and bullish order flow, and on the charts it might not look that easy, right? There was like a drawing and it's very easy when everything is straight lines, but on the charts it's much more confusing. So once again, let me just go through a scenario for you so that you can understand this even better. Maybe let me use like yellow color right here. Over here, price was creating an uptrend, right? You can see this is purely like, if you look at the external structure, right, it's a bullish trend, right? It's a bullish uptrend, it's a bullish order flow. And in this case, this is just an overall retracement. And this is the last higher low right here. I mean, this is the last higher high. And then this is the last higher low right here, right? Okay, this is not really a valid higher low. I wouldn't consider this as a higher low, but this could be the last high right here. So in order for price to continue and sustain in this uptrend, price must break through this last high and create another higher high. So this level right here. And price starts retracing after a very long uptrend because, you know, nothing goes up forever, right? It needs to enter into a price where it's basically cheap to buy for smart money to actually enter for the trade, right? And so far, this was actually not a very good screenshot because I wanted to see like the previous leg as well. But anyways, you can see price starts retracing, going back down, going back down, going back down, going back down, creating your bearish internal order flow. All these are just pure as day bearish internal order flow. This is your retracement, right? This is your retracement phase where everything is just going down because price is going to get to some sort of demand zone, right? So that more buyers can actually enter for the trade. So at this point of time, price retrace, lots of bearish order flow, lots of bearish order flow. And basically how you can identify it is by drawing a box and drag it from the high to the low, drag it from the high once again to the low, drag it from the swing high to the swing low. You'll notice all these are bearish order flow. And you can see once price starts retracing after it created this bearish order flow, it tends to retrace to the bearish order flow origin area right here before going down even further. And then once again, come up here, create your lower high, tapping into the supply zone, supply order flow before going back down even further. Now, at this point of time, okay, I forgot to mention, but price always end up creating minor break of structure. You can see right here, this is the last low, creating another lower high, and then break through the last low right here, creating a minor break of structure to create a new lower low. And then before retracing to create a new lower high, and then come back down here to create a new lower low. But if you notice, at this point of time, right, there is no longer any more lower low being created. This is the last low, right? This is the last low right here. And there is no further lows being created, right? So this could tell us that that's the first sign that this bearish order flow is ending soon and price is about to transit or shifting to the bullish order flow. And that is when you can potentially look for our setups, right? Now at this point of time, how do you tell that price has shifted from bearish internal order flow to bullish internal order flow? You look at the market structure. You want to wait for price to break through the last lower high. And where's the last lower high? This is the previous lower high, and then before price goes down here and actually starts retracing to create another lower high right here. So at this point of time, this is the last lower high that we have right now. So we need to wait for price to break through this last lower high to confirm to us that price is now in a bullish order flow, because price has broke structure, price has defied market structure, and this pretty much tells us that this downtrend has ended, right, and is about to reverse to a very amazing uptrend. And look at what happened right here. Price created a new low, and then this is the last low high, and eventually there was no new lower low, and price actually ended up reversing because the bearish internal order flow is gone now, and is retracing all the way up here to this last lower high, and observe what price did. Price broke through this last lower high with lots of momentum, lots of pressure, telling us there is a lot of bullish, there's a lot of demand at this price point, right? Because like I said, right now price has managed to retrace all the way down here to be like probably at the 50% Fibonacci retracement level and the equilibrium, right? And now there is buyers waiting at this level to actually enter buy orders in bulk because it's extremely cheap right now, right? You want to buy low, sell high in trading, right? And this is how you buy low and sell high. You don't want to be entering for buy positions right here where price is in the bearish internal order flow. You want to wait for price has shifted and aligned to the bullish order flow, and that is when you can potentially enter for a buy. Because when price is going down, it can go down even lower if price don't do this, right? It can go down even lower. And in that case, you have missed out on that overall trade, right? And you will probably been wrong. And you can see right here, this is when price have shifted from supply order flow to demand order flow. And after price created a market shift right here where price has broke through the last lower high, and it starts creating lots of impulse movement, creating higher highs, higher lows, leaving behind a lot of minor break of structure here and there, right? And you can see what price does is that eventually it managed to come up to the last high, right? This is the last high right here. This is the highest point before price actually starts retracing to the discount price. And right now, price is managed to come up here to the last high, right? So as simple as that, guys. Bullish order flow and bearish order flow. So make sure, once again, you go back test this whole strategy. It is extremely crucial that you actually understand order flow, understand how, or rather why it works and why price moved this particular way. Like I always say, there is no such thing that price is just gonna move randomly, right? Price has a structure to it. There is some sort of market structure, and always remember that buyers, they are looking to buy at a discount price, and sellers, that are looking to sell at a premium price. That is why there is all this demand and supply order flow, because the buyers, they want to buy inside this demand order flow range, and the sellers, they want to sell within this supply order flow range in order to make money, right? So that is essentially just how the market works, right? We can't really change how the market works, but what we can do is to understand order flow and truly understand the algorithm of the market and just try to trade and be on the right side of the market. Like example, for in this case, right here, price, external, structural, the overall bullish flow is actually bullish order flow, lots of demand, price is actually an uptrend. It would be extremely stupid for you to actually enter for all these sells right here, right? All these sells right here, because you know that the internal order flow is not aligned with the external order flow, which is bullish. So all these are just internal, external order flow and just like mini structural. And this is what we truly want, the internal order flow to match up with the external order flow. So that just now I mentioned that the external order flow is bullish, and right now we are waiting for internal order flow to be bullish as well. And that is exactly what price did. Coming up here, creating another break of structure after price is broke up the last lower high. So yeah, I'm sorry if I end up actually murmuring a little bit inside this class, because I'm actually extremely sleepy right now. I had a long day, but I just wanted to make sure that I give you guys this as much as possible, and I'm able to explain this in a way where a 5-year can understand. Alright, so yep, cheers guys.